All right, Reema, thanks a lot for that. Well, it's been an okay kind of day. For the Sensex and Nifty, of course, a bit weak, but for the mid caps, it's been quite stunning. Mayuresh Joshi is also with us from Angel Broking. Mayuresh, good afternoon. The stock of the day probably has been Reliance Communications. What's your call on this stock now?
Afternoon, Joshi. I think clearly with the news surrounding the stock with relation to the tower sale and whatever happens with the optic fiber business with Reliance Jio, I think the kind of core business dynamics that the company is going through, the kind of consolidated net debt that you've got around 39,800 odd crores, the annualized net debt to EBITDA still stays higher at around 5.5 times. Data traffic has not grown humongously for this company over the past few quarters. So clearly I think there are weak links in the core fundamentals of the company. It is more to do with the asset restructuring, the deleveraging of the balance sheet, which probably is taking an impact in terms of how the price is moving up. But clearly I think from a risk reward ratio, I think a lot has got gestated into the price. And again, I think a 10-15% move from the current level is not ruled out, but largely if you take a SOTP valuation, I think a large part of it would be factored in.
All right, well, that's the word coming in on Reliance Communications. Well, there are a whole host of stocks in the broader markets that have moved around, and one of the other names is Amtech Auto, which is a big mover in trade today. Mr. S.P. Tulsian is also with us. He had recommended this stock a couple of days ago. Mr. Tulsian, now we hear that not only are they looking to sell Numeya Tech4, but they're also looking to sell, many of their domestic assets as well. The stock has already moved up quite a bit. Do you think this trigger has gotten factored in, or is there more upside?
See, Sonia, first we must understand whether these all factors have got factored in or not. If you recall where we discussed day before, when I gave a buy call at 41 rupees, at that time my point was that book value is 280 rupees. And in fact, if you see the management statement, they have been saying that $1 billion from overseas assets, $1 billion from domestic assets. Domestic assets comprises mainly of their unrelated investments and some real estate. And the domestic and the overseas assets are including this Tech4, which is estimated to give them anywhere between, people are talking, of about maybe 5 to 6,000 crore, because if you see top line of 550 million to 600 euros, EBITDA of 11.5% of that company. So, people are expecting, but this one thing is certain, that the efforts are serious on part of the management, and 14,000 crore debt, is not seen to be too high when they are sitting on such a rich assets, number one. Number two, they can, realize a big chunk of money in one go. In fact, in case of Tech4 also, there are 11-12 suitors. Now, two names cropped up again recently of Bharat Forge and Mahindra CIE. And again, if you see that, in fact, earlier company was saying that they are looking to divest 30-40% stake. Now we get to know that they will completely exit, completely exit, and even the previous owner from whom the company has acquired, even they are seen in the race. So that it's a pricey asset. And the best part is that if they can en bloc, exit from Tech4, they can realize $1 billion or maybe 4,500 to 5,500 crore. That's a big sum they practically achieve. That means you just hit the winning shot in one ball, and you achieve that target. So you can't say that the price has already been factored in. Once that process will start, you will see a drastic fall in their interest liability of about 1,700 crore per year. They have an EBITDA of maybe about 2,500 crore on top line of 15,000 crore. So I see a vast re-rating, and that was the theme, in fact, day before when the call was given, that take 50% increase in next 6 months, because all these monetizations may take a little longer time. You cannot say that the things will happen in just next couple of months. 50% in next 6 months, that is a target of 60 to 63. But one won't be surprised to see share hitting 3-digit maybe in next 12 to 18 months. So I will keep my downside. Honestly, if you see the negatives, delay in monetization, bad results are not making the share to fall below 40. So you have a comfort or maybe a good support at 40, while the upside seems quite high.
Also not there in F&O anymore, so that shorting pressure.
That pressure is not there.
Yes,
that's right. And in fact, whatever you lead to, practically it is under-owned stocks also. If you talk to the people, they are sitting on chunk of the delivery having taken, and that F&O pain, of shorting in the market. But that goes other way also, because if this would have remained in F&O, probably you would have seen a rise of 60, 70, 80% in a day also. But any kind of volatility on either side is bad. So in fact, I am happy if probably if would have remained in F&O, would have been positive for bulls. But even that kind of moves are unwarranted. I should not see those kind of moves.
Yes, remember the day when it was up 70% or something, but clearly it's been very volatile. So that F&O pressure is no longer there, and that stock now trading purely in cash market. Mayuresh, you also have a mid-cap pick for us, Surya Roshni.
Oh yes, Anuj. Again, I think if you look at the company's main business operations, they operate out of the lighting division and the steel division. Now, the lighting division itself, the industry overall is expected to grow at a pace of 28%. Now, if you look at the industry size currently, our own take is by 570. The industry size for the overall industry should be close to 25,000 odd crores, out of which the LED component should be close to 10,500 crores. You extrapolate a little bit further into 2021, which is the government target. Probably you're talking about the lighting industry growing at that pace itself, reaching 37,000 crores, with LED contributing almost 58%. Now, Surya Roshni's initiatives into the LED space are very well known, and clearly I think the government initiative and focus and thrust on LED lighting overall is going to have a huge impact in terms of how the lighting division revenues and EBITDA pan out. Clearly, so far I think 100 crores is what the contribution is, but the management will be very, very hopeful that in the next 2 to 3 years the contribution reaches 500 crores. Overall, for the business divisions, lighting division contributes 40%, where the management is expected to hit that 45% mark from the division itself by 517. Now, in terms of margins, the lighting divisions entails margins of around 10.7, 10.8%, whereas the steel division has been a big drag on the company's overall consolidated profitability. But again, I think if you talk about the developments on the steel part, they're getting into rectangular hollow pipes, which is probably used in civil structures, furniture, transmission towers. So the volume growth is there, but the realizations on the steel business, unfortunately because of demand supply, is dragging the overall profitability down. However, I think with strong cash flows from the lighting division, I think the debt has got reduced by 65 odd crores in the first half. That is clearly evident from interest expenses, which have actually gone down 16% to 24 odd crores. So again, a structural shift in the industry, expectations of LED to contribute much higher, close to 30 odd % in the overall lighting business over the next 2 years. The other business divisions like fans are expected to contribute 200 crores. The home appliances, which include steam irons and other consumer durable goods, are expected to contribute 200 crores over the next 2 years. So we're expecting a 6.5% top line growth, close to that 3,223 odd mark. EBITDA margin should see expansion with interest costs going down. The debt should come down. The operating leverage benefits are quite significant for the company because it's a 100% backward integrated company. So the 100% integration will entail EBITDA margins of more than 8.5% over the next 2 years. And the bottom line should share 21.5% growth, close to that 80 crore marks. In terms of valuations, trades at 7.5 times, which if I do a comparison check for the consumer durable business of Orient Paper, I think it's relatively cheaper because the ROC of this business is much higher than Orient Paper. So clearly I think undervalued at this point of time with a 12-month target of 183 is not looked at.
Okay, fair enough. Well, we need to take a short break on that note, but coming up on the other side, Maruti Suzuki is confident that the minority shareholder will give their nod to the proposal allowing the parent Suzuki to develop the Gujarat plant. Exclusive details on the other side. Hi, welcome back to the show. As promised, we're going to talk about Maruti Suzuki now. The company is confident that the minority shareholders will give their nod to the proposal allowing the parent Suzuki to develop the Gujarat plant. Remember, the company is seeking a shareholder vote through a postal ballot currently, which will end on the 15th of December. Here's an excerpt from the CNBC TV18 exclusive interview with the chairman, R.C. Bhargav. Listen in.
That's Maruti. Well, it's been the only index stock which has been in an unadulterated bull market all through the years. Mr. Tulsen, you have been very bullish on Maruti, of course, but can this now cross 5,000 and go higher than that, or do you think at this point maybe there's temptation to book some profit?
See, Anuj, I have been my views, or I have been expressing my views that I don't see it moving beyond 5,000. You are right that I have been holding my bullish view on the stock for last couple of years. And if you see when this whole controversy of Gujarat plant, erupted about 18 months back or 16 months back, at that time stock fell maybe closer to around 2,000 rupees, and that time also I have been very strongly. But if you see now the behavior pattern, you have used a nice word, unadulterated, participation in this bull market, but actually the characteristic of the price pattern or the trading behavior of the stock is that it is moving in the range of 4400 to 4800, and I think that is a classic range for traders as well as an investor, and more in fact I would say for the investors. Just to give an example, play on in the options. You can as a covered call strategy, or maybe you can short the puts, because you know that if you have the capacity either to create the corresponding position in the cash or in the future in the next series, you can keep making money. But 5,000 rupees, I don't think that maybe till March 16 I see the stock crossing that. Eventually it will cross 5,000 rupees, but not till March 2016. Yeah.
All right, let's do one thing. Let's take a break on that note, but we'll come back for the last half an hour of trade. Our closing bell money control question of the day is, do you see the Nifty breaking 7,800 in the current weakness? Well, log on to moneycontrol.com and post your responses there, and we'll read out some of the most interesting ones post 3:30 p.m. today.
Welcome back. Well, again, drifting back towards the low point of the day, the Nifty that is, Hindalco is a stock where we have seen quite a bit of selling pressure in the last 5 or 10 minutes of trade. Hero MotoCorp is the other stock where again there's a bit of a selling pressure. If you pull out the intraday chart of Hero MotoCorp, Punjab National Bank has also seen some selling pressure in last 10 or 15 minutes of trade, so that stock also stands out. And there's some bit of weakness in a couple of these mid-cap stocks as well. They are seeing some bit of profit booking now. SpiceJet, in fact, is the one where we've seen clear profit booking. Jet Airways still in the green, but that stock has also seen a bit of downtick of late. And GMR Infra, a stock which has done remarkably well, that stock has also seen a bit of a correction over the last few minutes. Manas Jaiswal now joins us to tell you what to buy or sell today for a reverse trade tomorrow. Manas, hi, good afternoon. Your stock ideas?
Good afternoon. Both are buy calls. First is Jan Irrigation. Stock rallied smartly from the level of 50 to 68 in the month of August and September. But thereafter it was facing a lot of resistance in the range of 67, 68, 69. Today it broke that resistance with higher volumes. Oscillators are showing positive crossover. So I think we may see a sharp up move in Jan Irrigation. It can test 74 soon. So one can buy it with a stop loss of 68. And second is M&M Finance, where stock made a base near to 225. They started making higher tops and higher bottoms. Today it broke the neckline of inverse traditional pattern. Now the stock can test its 200-day moving average, which is a place near to 255. So that is our target. Stop loss should be 242.
All right, Manas, thanks for that. Well, Dipan Mehta also joins into our conversation to talk about individual stocks and, of course, the way the market is moving. Dipan, hi, is my voice reaching you?
Yeah, it's but breaking up a bit.
Okay, I'm going to try again. We've seen a lot of these spaces move up in trade, in the past couple of days. Aviation, a couple of these auto ancillary names. What are your top recommendations or any stocks that you have identified for the long-term investor?
Sorry, it's breaking up.
Okay, there's some issue with that audio, so we're going to try and rectify that. But Mr. Tulsian, the RCOM deal is on the anvil now, and that stock is up almost 8%. In fact, big volumes getting traded. What do you do as a trader and as an investor now?
See, both can take a positive view, because if you really see, Sonia, we have been hearing this for last maybe over 2.5 years, and they have been talking all type of options. But now it's seen that it's getting crystallized, and won't be surprised to see the deal getting consummated, or the announcements happen on maybe in this weekend or maybe beginning of the next week. So that will be a big, again, we have just now talked about MTech Auto, that if you can reduce the debt in one go. RCOM has a debt of about 38,000 crore on a consolidated basis, and people are talking of this Infratel tower deal to happen at 22 to 23,000 crore. Obviously that will be a big relief. You are just knocking off your 2/3 of the debt just in one go, and that market was really expecting that. They have not been able to bring down their debt. So positive for both for traders as well as for the investors. Maybe traders, yes, if the stock hits up by tomorrow also, again goes up by 7, 8, 10%, we may again see profit booking, because say, buy on the rumor and sell on the news kind of things. Traders always are very smart, but investors can then definitely start looking for some upside going forward. Yeah.
Okay, that's on Reliance Communications. The other stock that's looking quite good of late is Havells. Mayuresh, what's your call at 300 on Havells?
So clearly, Anuj, I think if I stack it up clearly again in terms of how their lighting division is moving in and how Sylvania operations are panning out, there is still some amount of overhang in terms of the core profitably, specifically in terms of how the pension liabilities for Sylvania will pan out. The ad spends have been quite high, which is again keeping check in terms of how the margin expansion is expected to happen. But clearly, I think the entire industry, as I was mentioning in the case of Surya Roshni as well, I think they will see a structural benefit happening, because once these LED orders starts moving in the system, I think a lot of players, including Havells, will benefit. And clearly, I think the new product launches from Havells is something that we also are expected to see over the next few quarters. But at the current juncture, probably I think it's fairly priced to perfection from an FY16 perspective. So clearly, I think I would wait for declines on a stock like Havells, but would maintain my positive stance on stocks like Surya Roshni and Bajaj Electricals.
All right. Well, Dipan Mehta has joined us once again. Dipan, I was asking you about the mid-cap space and where you see value in that space, because there's so many pockets like, auto ancillaries, aviation stocks that are doing quite well lately.
Growth, I think investors are, flocking to those counters, and there should be some value over there as well. But broadly, the industries, I think, which are being targeted as of now within the mid-cap space are mid-cap IT, especially the high performers over there, the likes of 8K, Majesco, Intellect Design, and then in
Okay, looks like we are having some problem with that link, so we'll sort that out in a bit. Mr. Tulsian, a word on some of these aviation names. There's been a strong re-rating that we have seen in Jet, SpiceJet, Indigo after IPO still up 40-50%. At these levels, are they still good buys?
See, maybe Anuj, I think the story has started mainly with the crude weakening, because the kind of crude weakness we have seen ruling at around maybe $40, and probably the re-rating has happened partly pre-IPO of Indigo in Jet and SpiceJet both, but now thereafter, because of the huge run-up seen in Indigo, which again, I'm not convinced of the fundamentals, because on a relative valuations, I have been in fact giving my call that if you want to buy Indigo maybe on the listing day also, then look for Jet and SpiceJet. But now maybe we start getting some adverse news on the crude, that OPEC may cut the production. Again the crude has slightly started moving up, edging upward. So maybe any kind of spike, because the best part is that stock has appreciated in this last 15 days. If you see in this last couple of weeks, both SpiceJet and Jet Airways. I am not talking of Indigo, because that has been lying, constant or maybe some in a very narrow range for last 1 week. But both these other two stocks have risen quite sharply in this last couple of weeks. So maybe this crude negative news, that means crude prices starts firming up, we may see profit booking, and the stocks can correct maybe anywhere between 6 to 10% on both SpiceJet as well as Jet. So yes, caution is required now. I am not saying that the long-term investors, if they have a comfort on crude, that it will continue to remain, but this is a clear play in sync with the crude price behavior. Yeah.
All right, well, let's talk about some more buzzing stocks. Varinder is here with us to tell us about some of the stocks that he has observed in the last 10-15 minutes. Varinder.
Well, in a few stocks which are buzzing up today, anywhere between 15 to 20%, there were a few names mentioned on our channel today. So look at DHP India, I think it's up over 20%. Zen Technologies management came over. Bharat Seeds, Orient Paper, a few other stocks which are up 20%. Among small cap gainers, some of these PSU companies, either it's ITDC up 15-20%, MTNL is buzzing today, that stock is at 15%, and these smaller hotel companies continue to gain. Kamath Hotels, EIH, Associated Hotels, other companies like SIL Investments, Visa Steel, Kilburn Chemicals, TCA Finance, AMD Medplast, Zealand has seen huge volumes today and the stock is moving up. Onward Technologies, PSA Limited, Transformers and Rectifiers, Dicafil Chemicals, this stock has been moving since last few days, keep an eye. Cineline India, Quads Cable, BS Limited, KDDL, which the up move started yesterday, is gaining today as well. Tara Jewels, Saint Gobain, Webull SL Energy, Magna Electro, some new names like HP Cotton Textile, Gror and Wheel, Mr. Tulsian Speck, Elnet Technologies, Star Leasing, Chemex Intermediaries, Rapicut Carbo Dyes is one stock which is moving up. And among the losers, if you're watching out for, then it's Gravita, Nelco, Ismo, SK Meg and Eon Electric which are moving down today.
All right, Varinder, thanks a lot for that. So these are some moving stocks that we have at this point in time. The market has slipped all of a sudden quite big time actually. If you see that the Nifty now at 7866, this is the low point of the day, and all of a sudden there's quite a bit of weakness which is emerging from across the sectors. It's no particular stock that you can point out which has led to this weakness. ONGC is down, Bharti Airtel is down, ITC is down quite a bit. In fact, ITC is probably the biggest drag. It is on the market today. So 7866 is what we have. And what's interesting is that even the mid-cap index has now seen a bit of a decline, and the advanced decline ratio, which was about even Stevens when the trade started or when the show started, that is now moved clearly in favor of the declines if you pull out the advanced to decline ratio. And some of these hotel stocks are seeing intraday corrections. In fact, let's pull out EIH. That stock has lost 2.5% in last 2 or 3 minutes of trade. So that we have seen clear signs of profit booking in EIH. We have seen clear signs of profit booking in Reliance Communications. That stock, which was up 10% at one point, is now up 6%. So it's lost about 4% from the high point. So there is a bit of profit booking that is visible in some of these names. Mr. Tulsian, a word on the overall market structure. Do you think there's a risk of the Nifty going back towards the previous lows of 7,500 thereabouts?
Unlikely, because if you really see, maybe people are talking of, there are two triggers. One is that advanced tax liquidity squeeze will happen on the 15th December, number one. Number two, FII is going on holiday. But Anuj, let's not forget that this is a 5-week week, and generally whenever you see every third month you have a 5-week F&O series. 1 week is always is very dull and boring. In fact, if you see the start of the series, I am not disappointed. In fact, series has been more or less on a stable note, and I am going forward, maybe the things will start building up, because come on the GST, what is the biggest trigger for this series? In fact, I said that, and that you will get to know only on the 20th and 21st December. No point, because we are used to doing the things at the last moment. If you have to file your income tax return, people will wait on 29th December night if the last date is 30th. So similar is the case with the ministers, or maybe with the parliament also. The session is getting over on 23rd. We will get to know by then whether the GST likely consensus is happening or not. If it is a washout, definitely that will be negative, again, because then that coincides with the FIIs again going on holiday. So you will see last 1 week quite negative, because 31st December is the expiry. But as of now, maybe for next couple of weeks starting Monday, I'm not talking of tomorrow, again weekend being could be the dull day or a narrow range day, but starting next week I'm keeping a positive hopes, and 7,500 in my view seems unlikely.
Okay, well, 7863 now on the Nifty, and the Sensex too is well below that 25,900 mark. So it's a 220 point cut that you're seeing on the Sensex as we speak. Sudarshan, what's your view on how the market should be approached right now? I mean, are there any fresh shorting calls that you would you would advise on the index itself?
No, on the index, then the index is now opening up for short selling, the Bank Nifty as well as the Nifty. Rather than do it today, perhaps tomorrow is a better day when you can, if you see 7850 crossed decisively, which means for a couple of hours or whatever, or maybe much lower, that's the point at which we should open our look to go short in the markets. Our stops will be 100 points higher at 7950. This market already knows. I was fairly upbeat till yesterday morning. This market knows that GST may be passed and all the good news is coming in, and yet it's reacting very adversely. It's very uncomfortable.
Okay, a word on Tata Motors, Sudarshan. Is the relief rally sort of over? I mean, it was more than a relief rally, it was a big rally, but is that coming to an end?
Yeah, that's coming to an end. It was a proper up move, an intermediate up move. That is coming to an end. It's distributing now. Tata Motors is now likely to go either a shallow correction or a sharp correction, but it's not a buy, and aggressive savvy futures traders could also look to sell it. Surprisingly, the entire PSU Bank lot has become a short sell. Till yesterday we were buying it, and it took just 1 day for the trend to change.
Okay, well now it is getting worse quite rapidly. So almost a 1% slide now in the index, and there's a threat of 7850 breaking as well. A lot of stocks in the broader markets have started to correct. So just take a look at some of them. Subex is down about 6%, IVRCL is down 5%, Parshvanatha Developers is down 6-7%, Just Dial is down about 5% odd. So a lot of these stocks are coming under quite a bit of pressure. Anuj, we were talking about this earlier, how the mid-cap end of trade, it's getting a bit scary now in that end. And if you look at the advanced decline ratio, it's quickly moving towards the declines.
Yeah, you remember we just started the show with saying that there's quite a bit of complacency in the broader market, Sonia. There are 2 or 3 classical parameters that you don't normally go wrong by. When you start to see hotel stocks rallying, that normally in the past has been the point at which you need to raise the red flag and say that okay, there's quite a bit of euphoria in the market. You've almost reached a stage where you're saying okay, aviation has rallied, so maybe now hotels should rally. Now hotels have rallied, so maybe what next should rally. So when you reach that stage, which sector is left now? I think even sugar has had a rally, fertilizers have had a rally. Some of these sectors, the kind of rally that they've had, clearly made prices a bit uncomfortable. A lot of prices are uncomfortable, and that's exactly how it's playing out. Not to say that this is the end of the mid-cap rally, far from it, but I won't be surprised to see if some of the stocks have to now reverse the kind of gains that we have seen, or at least see a profit booking of about 10 to 15%, which is only going to make the market a bit healthy. In fact, as we speak, the mid-cap index is also at the low point of the day, and the Nifty is about to break 7850, which would be quite interesting because so far it looked like at least that was one mark which the Nifty was going to hold. ONGC is now leading the market decline, down about 1% in last 10 minutes of trade on ONGC. So that's also not looking good. Mayuresh, from the index, is there anything that is still a buy for you, or would you say that better opportunities are still in the mid caps?
Even from the index itself, Anuj, I think the private banks do offer a decent risk reward, and clearly I think the kind of beating that we've seen on a few of these stocks related to their asset quality, take the instance of Axis Bank with the sale that happened to the ARC units. But clearly I think a lot of managements are very, very hopeful. ICICI Bank's management is very hopeful of maintaining or bettering its restructured asset book, and overall I think the asset quality should improve in FY16. So from a price to book parameter, capital adequacy parameter, private banks do offer a good investment space over the next 15 to 18 months. Similarly, in the case of large cap cement, companies like Ultratech Cement, which have posted decent numbers both in terms of how their EBITDA per ton has panned out, more to do with fall in raw material prices, specifically pet coke. And clearly I think the kind of contribution that we're probably seeing with the acquisition of JP units, 71.2 MTPA, I think the installed capacity itself is quite huge. So with realizations improving over the next few quarters, volumes improving at a fast pace, top line and bottom line growth should be anywhere between 15 and 33% respectively. So I think Ultratech, though trading at a higher valuation at around $178 per ton, clearly looks good from a 12 to 15 month perspective.
Okay, so Ultratech Cement looks good from a 12 to 15 month perspective. Now the market has arrested its fall, so it's around that 78.60 level itself. So let's do one thing. We still have about 15 more minutes to trade. So let's get you some opinion that we got from the mid-cap end of trade. We spoke to a lot of companies earlier today. Zen Technologies was one company. It expects to clock in revenues of around 500 crores over the next 1 to 2 years. And that's been a company, not Zensar. Zen Technologies is the one I'm talking about. And that company has given you very good returns in the past as well. So let's listen in to the management.
Cumulatively, we are expecting, we said that we are in the bid race for about 500 to 700 crore worth of orders, and we are there in quite an advanced stage. We expect that these will be, we may get these orders. And if this happens, that means to say that cumulatively we will be doing about 500 crores in the next 2 to 3 years. That is our expectation.
That was Zen Tech, but Mahindra Holidays has seen a 50% increase in their number of members in first half, while the stock has surged 72% since July. We spoke to the management to get a sense of how membership looks like, and here's what the management had to say.
We have seen a 50% growth in member additions, not only in Q2 but also in Q1. Run rates are a function of the basis. There is some amount of base effect that we enjoyed in the first and the second quarter. Third quarter generally is good. Our average unit realization net of everything is hovering at about 3.5 lakhs per member. So realizations are roughly managed at the same level because our product mix, as you know, we sell 4 seasons. We have blue, white, red and purple. The mix is holding on. Yes, there is a certain amount of deterioration in the mix that we saw. So there is a minor change in the average unit realization, but nothing much to really talk about.
All right, well, some of the auto stocks are now starting to correct quite a bit. So just look at the intraday chart of Hero MotoCorp. It's now down about 2.5%, and a big chunk of the fall has come in the last 10 minutes itself. The intraday chart should be up for you on Hero MotoCorp. M&M and Tata Motors are also down about 1 to 2 odd %, and then a couple of these other names as well from the auto space in the broader markets are not looking that good at this point in time. Sudarshan, just a quick word on names like Hero MotoCorp, M&M, Tata Motors, or rather just on Hero and M&M, or what would your view be now?
No, I would be. I would not go and short sell it. It's very difficult to say for the short-term trader, go and buy it. The Nifty is falling. Why should you buy anything? But both the names are not short-selling ideas. Whenever the Nifty stops falling, we would be looking to buy that. And quickly, Sonia, we went long at 78.50 and eventually trailed our stops and said if 7900 is hit, get out. That is necessary for the short-term trader. If you don't use a stop loss, you get ruined. And we ensure that our viewers never go into trouble.
Oh yes, Sudarshan, that we've always advised trailing stop losses even for profitable trades. So that point is clearly taken. But Tulsian, a word on BHEL. I mean, at what point do you think this rot is going to stem? I mean, not long back it was at 300 and now at 160 and still falling.
See, Anuj, sometimes, look into the result of the company and more especially of Q2. Sometimes you feel that as if they lost their desire to exist, their desire to exist. Rather, this may be a little harsh word to say that, because it was one time a blue chip company. No doubt that the competition had heated up with the other manufacturers also coming in. But this is not the way. You are a debt-free company. You are sitting on huge cash. You have the advantage of the PSU orders and all that. Even you were sitting on a good order pipeline. But not seeing any kind of execution profitably or new order inflow coming in, that is bizarre, honestly. So sometimes by looking to that has really disappointed. I recall maybe 4 or 5 years back, or or 3 years back when we had a similar kind of thing, you were finding that maybe this could be one-off. But I don't think that one can really take a call on this stock. In fact, sometimes you get to shift your focus on the expensive stocks like ABB, like Siemens, or maybe like Thermex, which are not doing so well and they are very expensive. Maybe ABB is ruling at a P multiple of 90-100, Siemens at a P multiple of 70-75, Thermex at a P multiple of 30, but still you look to plunge into those stocks, maybe Alstom, maybe like many other these kind of stocks. I'm just referring in the same category, not necessarily of the capital TBG, turbine boiler generators, but broadly of the capital goods range. So honestly, I'm not very excited on BHEL that one should remain invested.
All right, let's do one thing. Let's go across to our colleague Ritu Singh, who's been waiting by. The final guidelines on the new method of base rate calculation is expected this evening around 5 p.m. So that will be one trigger to watch for the banking sector. Ritu Singh joins in to give us more details. Ritu, go ahead.
Well, both the Reserve Bank of India and the government have been pushing the banks to lower their interest rates, especially after RBI has brought down its key benchmark rates by about 125 basis points this year. And one of the key grouses of the banks has been that their base rate calculation methodology does not allow them to pass on the benefits immediately to customers, which is why RBI came out with draft guidelines on this new method of calculation of base rates back in September. And the final guidelines, as announced by Governor Rajan in the credit policy just this week, are expected either today or tomorrow. So what these new guidelines really say is that banks will now have to move to marginal cost of funding based approach in their calculation of base rates, which essentially means that any incremental fall in prices due to a reduction in cost of funds will have to be passed on to the new customers in the form of lower base rates. Right now what the banks do is use an average cost of funds approach, which essentially means they price their base rates, which is the lowest rate at which they can lend lend linked to the highest tenor of deposit, which is usually a 1-year deposit, and that is how they calculate the base rates. But with this new method of calculation of base rates, they will be able to pass on these benefits quicker. And of course, the longer term view is to allow banks to link all of their base rates and lending rates to a key external benchmark. But this in the short term is something that the RBI has asked the banks to apply starting April 1st, 2016.
All right, Ritu, thanks for that. So that's something that we're going to be watching out for. But let's get, we just have about less than 10 minutes to go for the markets to close. Let's get some final comments in from our guests. We have been speaking about the technicals of this market, which are looking weak currently. So 7860 is where the Nifty is currently. Sudarshan, we were talking about some of the two-wheeler names, but what about some of the PSU banks now? Names like PNB, SBI have once again started their downtick. Any fresh shorting positions that you would identify there?
Yeah, I said that it took just 1 day for these banks, and we were upbeat for 15 days. And 1 day down the line, all of them have changed their character. PSU banks are a short sell. Bank of Baroda, then Andhra Bank, and the worst of them is Can Bank, which was earlier doing well. So Can Bank and Bank of India are easy short sells, and Andhra Bank and Bank of Baroda are there also.
Okay, so these are some shorting ideas from Sudarshan. Mr. Tulsian, anything that you would want to short at current levels, which is not looking good from the index?
Maybe metal stocks, Anuj. If you really see, probably take the case of JSW Steel. Honestly, I've not seen the price now, but I don't see honestly any reason for the stock to rule at 980, 985. Yes. The kind of swift up move which we have seen in maybe in this last 1 week by over 100 rupees. In fact, if you recall, the same thing has happened with the start of November series. We have seen all the stocks, metal stocks going up, and more especially I'll talk of the ferrous metal, in which you can place Vedanta, you can place JSW Steel, you can place Jindal Steel and Power, Steel Authority. These are the stocks I don't think which really warrants this kind of up move, and maybe Tata Steel. They are believe me that they are passing through a very bad phase, and this is just a technical momentum which cannot survive for a very long time, and including Hindalco. Hindalco is not a ferrous play. This is purely a non-ferrous play into aluminum and copper, but look into the debt situation and the kind of overbought positions which you have seen in the Hindalco. I will be going short, keeping a short view on all these stocks. Yeah.
All right. That's the view coming in on the metal space. Continue to have a short view there. But before we end for the day, let's also get you some wealth creating stock ideas that were recommended by Prakash Diwan earlier in the morning.
And this is ideal for retail investors to build into their portfolio over a period of time. DHP is a West Bengal based, Havana based company that's into LPG regulators and accessories and related brass items. Now, what's good about the financials on this company is it's almost debt free. 0.12 is the debt equity ratio. They've expanded last year without taking any kind of long term borrowings, and this too is a working capital gap that they fill up. In fact, we had advised them to significantly increase debt so that they could, grow faster. And the other thing is they've also got investment into some mutual funds, which adds up to about 41 rupees per share as on September, where the stock is just about 100 rupees. Cholamandalam has gone ahead and moved to something called the 120 days past due methodology for recognizing their NPAs. Now RBI is stipulated that this is going to be done next year and then subsequently to 90 the subsequent year. So from 180 it's 150, 120 and 90 days in that order, whereas Chola has done this 6 quarters in advance. Now what that means is it doesn't have any burden while it's lending a fresh portfolio. This is an expensive stock, mind you. Let me give that caveat that if it goes down, it becomes more attractive, and it could go down in volatile times. But if you were to buy this into a portfolio with a 18-24 month perspective, you could get about 750, 770 as a range, and which is still at 3.25 times adjusted price book.
Okay, the market is going to end at low point of the day, so not been good. In fact, by the end of trade, only 7 Nifty gainers and 43 Nifty losers. So that's not bad, because that's telling you it was not one particular stock problem that the market had today. Quite a bit of problem for a lot of individual names. Sudarshan, a word on ITC, which has become so volatile. I mean, I don't remember when was the last time ITC went through this phase when we didn't have a sort of a particular trend for ITC.
The ITC trend is up, Now it's very volatile. It's going with the Nifty. Rather, the Nifty pressure is coming on ITC. But ITC is building a very large base. Whenever this market recovers and starts going up, ITC should be an outperformer. But if overall sentiment is weak, ITC will be very adversely affected because it's a major part of the Nifty. That's exactly what's happening. The stock chart is not bearish.
Okay, and would you say the same about lever?
I think so. I would say the same about lever. In fact, apart from metals, most stocks are responding to market sentiment rather than the other way around.
Okay, Mayuresh, we've discussed Amtech Auto several times in the past, but wanted your view on it now that there is some concrete news flow with respect to it deleveraging its balance sheet. They have put out a target of $1 billion over the next 12 to 18 months, the amount of funds that they'll raise, and now Numair Tech4 is on the block, several of the domestic businesses as well. Would you advise long-term investors to get into this name now?
Again, Sonia, I think as a view, I think we still remain neutral. Clearly, I think the kind of debt that it's got in books, the deleveraging efforts had to start. There were no two ways about it. So clearly, I think what the management is probably doing is in a certain way ensuring that their balance sheet at least remains the way it is. So clearly, I think the business lines that they run, specifically on the overseas business, they are business lines which cater to important clients. And even on the domestic assets, if the sale does come through, yes, I think the debt reduction can be quite significant. But let it come through, let the valuation come through, and let us then analyze what kind of impact it will have probably on the remainder of the business that it probably owns, the kind of cash that it can generate over the next 4 to 6 quarters, and then we'll probably make a call. So at this point of time, we're largely neutral on this stock.
Okay, neutral on Amtech Auto. Just about 3 minutes left for markets to close. So let's just do a quick recap of how trade panned out today. It was a bad day. I mean, till about 2:30, you could say that the market sort of weathered the storm. But really, in the last 1 hour of trade, and more particularly in the last 30 minutes of trade, there was quite a bit of decline, which took market towards the low point of the day. And Nifty clearly now broke 7,900. In fact, going home towards 7,850 thereabouts. In terms of drags on the index, ICICI Bank was the biggest drag. That was down about 2%. ITC as well down 2%. Tata Motors down 2%. So that's in terms of the index heavyweights with large weight in the Nifty. Apart from that, you had ONGC that was down 3%. BHEL was down 3% as well. Lupin 2.5% lower. Punjab National Bank, Hero MotoCorp, Hindalco. What was really interesting about today's trade is that if you take a look at the top 10 losers, they were all from different sectors. All of them, ONGC, BHEL, Lupin, PNB, Vedanta, Hero MotoCorp. So across ICICI Bank, ITC, across the various sectors, we had some big losers. Apart from that, State Bank of India was down 1%, BPCL was down 1%, Coal India was down 1%. So a lot of individual names were down about 1% in today's trade. You could also add names like TCS, Dr. Reddy's that was lower, Bajaj Auto was down as well, Bharti Airtel was down as well. As the contribution chart would suggest, it's not really one or two particular sector problem. Across the board, you saw some selling pressure. Let's talk about some winners then. We had only 7 Nifty winners. Axis Bank was the top winner, up about close to 0.8%. Tech Mahindra was up about 0.5%. Then you had IndusInd Bank up about 0.5%. Ultratech Cement, which has been one of the relatively stronger stocks, that was also in the green. Maruti Suzuki was also in the green, though the gains were muted, and towards the end it also gave up a lot of those gains. Really mixed picture in the mid cap. There were still some big winners, but towards the end clearly there was a bit of a scare, Sonia.
Yes, there was, and there was a theme, Anuj, all of the stocks that were big losers through the year corrected today. So whether it's IVRCL, JSPL, Unitech, JP Associates, IDFC, all of these stocks went down about 3 to about 7% and we did see corrections in a whole host of the vulnerable names. On the upside though, Amtech Auto was in focus, up 10%, as it will be selling its German subsidiary to raise money, and there are some suitors like Bharat Forge in the fray. Reliance Communications was also in the green, one of the stocks of the day. It may sign that lease deal with Reliance Infotel as early as this week, and the deal is pegged at 22,000 crores. So Reliance Communication up and about. Hotel stocks once again in the green this afternoon. So you had EIH Hotels, Kamath Hotels that were all in the green. Orient Paper went up about 20% today. You had Bhushan Steel that went up about 12.5% and a couple of other names like Jain Irrigation, Havels did quite well. Jet Airways hit a fresh 52-week high, so up about 2% on that stock as well. So we end the day which has been disappointing for the bulls. The Nifty goes home with almost a loss of 1%. The Sensex down more than 200 points and has closed at the 25,900 mark. Mr. Tulsian, have you taken a look at Orient Paper? That one went up 20% today. Have you tracked that stuff?
Because there is a news that they are hiving off their electrical division, and but I am worried about their paper division because that continues to be a loss making. And sometimes market, this is my view, that sometimes market goes overboard on these kind of restructuring move, but they don't take the sum of part valuations. But maybe in the past in many of the companies, IT companies, we have seen the sum of part to be seen to be quite high. But I don't think that these things can really work in this kind of company, and as such the group, CK Birla Group, is not very investor friendly if you really see the track record. So maybe for these reasons the stock has been ruling at 20% upper circuit since afternoon, but I'm not very positive.
In fact, we did break this story, Varinder broke this story that they will be demerging their electric consumer durables business. Based on that, you would not advise
no, actually the same thing has happened in Crompton Greaves. Well, we have seen the fate of that, that has been hanging there. In fact, initially there was also big euphoria. We have seen at that point of time, stock moving to 230, 240. But since then, so, and actually in case of Crompton Greaves, the problem was more of their electrical business or their core business of their European or maybe the overseas business. Otherwise, they're all Indian businesses were all doing very well. Consumer electrical were all doing very well. But here in this case, as I said, that they will be left with paper and all that. So what will be the fate of those divisions? So I'm not too enthused with the
Okay, Mr. Tulsian, a word on Apollo Tyres that was down 4% today, maybe because of the Chennai news flow.
Anuj, if you really see the tire stocks, have the behavior, I don't think that Apollo Tyres have ever participated in a sync with any other tire place. The most what you call comfortable stock has been SIAT. You see it bouncing back very quickly, maybe because of the strong hands holding that stock, then followed by MRF, and then you have the JK Tires and all sort of things. But I don't think that Apollo Tyres, because their Q2 numbers was a big disappointment. Then again you have similar kind of problems cropping up every now and then for the stock. So I don't think that you have seen that comfort for the last 1 year, in fact, on the tires, on this particular stock, in spite of positive view remaining on all other tire stocks.
Okay, Sudarshan, if the market has to go down from here and maybe break 7,800, which 2 or 3 index stocks would you be comfortable shorting, or do you think can take the market lower?
That one is easy. It will be the banking stocks that will start the way. And you name the 4 large banks: ICICI, Axis and HDFC Bank, not the housing company. So all 3 will be weakened, and that includes, and then the PSU banks, whatever the contribution is. State Bank does have a large contribution. We have the weaker players like ONGC. The big rally in GAIL is likely to dissipate if the markets again go down. I think it will be across the board. Pharma's correction I thought was getting over. It will re-enter that phase of correction. So it won't be metals, it will be much bigger players. I think this time this sentiment will bring the market down, not the impact of any individual stock.
Okay, well, there's some news flow that's coming in right now on Dena Bank. This was on expected lines actually. The board was to meet today to take a call on raising equity capital by diluting government stake, and now the board has approved bringing down the government stake from 65% all the way to 52%. They're also looking to raise some capital, tier 1 capital of up to 1,500 crores and tier 2 capital of up to 1,000 crores. But now they've gone ahead and decided to raise equity by diluting the government holding from 65% to about 52%. That's what sources are telling CNBC TV 18. From the PSU banking lot, Mayuresh, is there anything that catches your eye, anything that you'd want to buy for the long term or even for a trade?
So clearly with the long-term perspective, Sonia, I think State Bank is something that we are very comfortable with, but then again in a staggered manner, because clearly I think the way the numbers have panned out and the management has given guidance of restructured assets to the tune of 6,500 crores. Having said that, I think even if you take into account the gross NPAs plus the restructured asset, it still remains around 8.05% compared to 8.8%. So that's one encouraging sign that you're probably seeing. So again, I think any recovery that probably happens in terms of advances, that capital adequacy remains extremely strong within the PSU pack. And again, valuations seem very, very attractive. If you exclude the value of subsidiaries, trades around 1.1, 1.2 times price to adjusted book. So on decline, State Bank in a staggered manner, I think is something that we would like from the PSU Bank.
Okay, Mr. Hussain, a word on Dena Bank and the news flow that we're flashing right now.
See, in fact, Anuj, this applies to all the banks. In fact, government has taken a decision that they will reduce their holding to 52%. Now, probably we are seeing for the first time a bank, taking that initiative. But the question is that they will be raising, that means that kind of money, maybe about 1200 to 1500 crore from other than government. Because if what we have been seeing that all the PSU banks are seeing infusing of the equity, which is eventually increasing the government of India's stake. And on the other hand, government is saying that we will bring down our stake to 52%. That was, totally contradicting. Now the question is that when the Dena Bank will be raising the money to bring down the government stake by maybe 12-13 percentage, that means they will be issuing the share at a very cheap rate. As such, all the banks, are ruling at a price to book of maybe 0.4 to 0.6. And this smaller one like Dena Bank, Andhra Bank, Allahabad Bank, these kind of banks are seen quite low on the valuation. So sometimes I wonder whether these kind of moves are rational, or because government should take then a conscious decision either of creating a holding company, pulling all the stake there and then come out with so this piecemeal, if you carry out the move, then also it is bad. If you don't carry out the move, then also it is bad. Because ultimately capital is a lifeline. It has to come from somewhere, either from the government, the existing promoter, or from the other investors. Yeah. But at what price? That's the issue.
Okay, gentlemen, we'll end the segment on that note. In fact, we'll let all of you go. You guys have a good evening. We'll see you again later on. Well, that's the word coming in from our market experts. It's been a disappointing day for the bulls. The Sensex and the Nifty go home with almost a 1% cut, and the mid-cap index as well is down about 0.5%. Let's take a short break, but up next, we'll get you a view from the NMDC management.